Hi traders, today we're going to talk about money management or risk management. So there's three types of risk management you need to know. The first one is you're trading your own account, which let's say you have $1,000 or 2,000 or 5,000 or $10,000, that's your own account. The next is in case you want to flip accounts, you need to know how to manage your risk for flipping account. And the third one is for your funded account. So these three different money management things you need to know if you're trading. You cannot use the same money management setup for all these three types of account. So the first one, you're going to go to the basics, which is your own account. So for your own fund money for your own account, let's say your account balance is 1,000. What you're gonna do is you need to go to this baby bips position size calculator. This is the basic one. You can go here. You put in your account balance. Let's say your account starting balance is $1,000, and let's say you want to risk. Let's say you want to risk each trade. You want to risk only
6:30.
1%, and your stop loss is 20 pips. And let's say the currency pair you're trading, you can choose from here. All the currency pair will be here. So let's say just to make things easy, you are calculating for Euro USD, just put calculate. So when you calculate for this 1%, so your lot size is 0.05. Always go for your standard lot size because that's what most brokers use. Let's say if you're using a cent account or anything, then you can go for this. But that also you need to check your position size. So this one is position size is 0.05 for your standard lot, and the amount you will risk when you lose is only $10. So let's say you want to up your game and you want to risk 5%. And see, it will just change. Your lot size will change now to 0.25. And what if let's say your stop loss become 10 pips? The lot size immediately changes. So to do this, let's say you change a different pair, let's say you go to Euro AUD. So when you change to Euro USD, here you need to enter this value 0.66918. You need to go to the chart and then you look for the value on the right side. This is the current value. Why this is value is important? Because Euro AUD is not only on Euro. You need Euro and also AUD at the back. So that's why it's asking for AUD price. So once you ask for that, and then you can get this lot size, standard lot. Did you notice or not? This is Euro AUD, 5%, 10 pips, 0.5. Let's say I change back to Euro AUD. You see, this is a very standard example you're having it when you use the same loss lot. Let's say we change to, let's say your stop loss is very huge. You are trading for 50 pips, then you just put 50 pips. So this 5%. You just can play around for 20%. So this is how you do. Once you have this, this is a tracker which I use. Let's say you are trading multiple pairs, you keep changing your pairs, you need this table. So why this table? Let's say you have $1,000 and this is $5, $10, 20, 30, 50. These are the amount you will lose. And this is the risk size 0.5, 1, 2, 3, 5. If you want, you can add another column for 10%. Or whatever you have for 5, just times by 2. So when you risk like this, you will get for 5 pips, 10 pips, 15, 20, 30. Why here I give different variation? Because sometimes your trade might get 20 pips stop loss, sometimes you have 10 pips stop loss, sometimes 50, sometimes 30. So whenever you have a table like this, you can refer back to this. So this I'm going to leave it empty. Already have done some, but I'm going to delete everything. When you're going to receive this table, it's going to be empty. It's for all the pairs here. You can see Euro pairs, Great Britain, AUDs, CAT. So you can choose what are the pairs you're going to trade. If let's say you only want to trade one pair for Euro USD, you just can use this. You can write it down in a paper, or you can put it in Excel, or you can put it in a note in your trading view as well. You can put it a short note at below here, like what are the trades you're going to take. Just put it at a note, and then you put anchor point, and then you can put the lot size here. So this will be your lot size. So when you want to trade, you'll know, let's say for 10 pips stop loss, you're going to take a 10-cent lot, and then for 20 pips it's going to be 0.05. So if let's say you're trading few pairs, this will be here for AUD USD. So whenever you want to execute the trade, you can just look into this. You can use your AUD USD, the trading chart panel, as a reference point, so you don't go back and come forth and back between different states. Here itself, as I said in my previous video, you can have your rules as well. And then you can play around with the size. Let's say it's too consuming, you can just reduce it. If you want too big, just can increase the size. So all this will be here. So once you have that, this is your lot size calculator. Even let's say you are trading some other currencies, you can still look back into here. You'll have everything here. And this is the account currency you are trading. Let's say your currency is different. Let's say your currency, you're watching from Japan and your currency is JPY. See, now it will be a different lot size. You look at the lot size or not, it will change. So whenever your account currency change, it will change. But mostly what I'm using is I'm using USD. So I'm going to stick to that, and this is your account balance. Let's say now we go to funded account before we go to flipping account. So let's say you have already have a funded account, or you are looking into going to funded account. So funded account, The first is you want to pass the challenge. I'll suggest risking 1% to 2% for passing the challenge, because when you risk 1 to 2%, you can pass the challenge quite fast. But you want to go the safe side, you need to risk 0.5. So let's say account size is 100,000. And then you're going to look for risk 0.5, and let's say the stop loss is only 12 pips. You see, this is the lot size you're going to use. Let's say it's 10 pips, it's going to be 5 lot. If let's say you're risking 1%, it's going to be 10 lot. So this is how it's going to be for your funded account. So the same thing you can do here, you just change this lot size, and you can change this to 0.5 to 1 and up until 0.25. So this will be, let's say for funded, this will be 0.25, this will be 0.5, and then this will be 1%, and the max you want to risk for your funded account is 2%. You don't want to risk more than that. Why we are giving this calculation is, let's say for funded account for max one is your max drawdown daily is 5%. So if you take 0.5, your risk, you can lose 10 trades in a day if that's in your trading journal. You can take 10 trades. But let's say you're not trading 10 trades and you're trading only less trades. So you can take more trade, you can increase this. Let's say still 5%, you can reach to 1. Let's say your risk is 1. This is risk. You will be taking 5 trades per day. You can lose up until 5 trades. So this will be 5 trades. So you need to know how many percentage you want to lose per day and what's the risk size. Let's say your max trade. Just going to give an example here. Let's say your maximum losing, you want to cap 2% per day. So when you cap your maximum losing 2% a day, let's say you take 4 to 5 trades per day. So if you risk 1%, you're going to miss out on another 3% trade. So you're going to risk only 0.5 per trade. So you can take 4 trades per day. So this is how you're going to change your trading plan according to how much you're going to risk. Let's say you only take 1 trade per day. According to your trading plan, you trade 1 currency or 2 currencies, only 1 trade you want to take per day. For this, even you can risk 2% per trade, because you're going to lose trade maximum amount in it, so you're going to lose 2% per trade. So once you decide these are the terms you're going to use, these are the terms you're comfortable to trade and comfortable to risk. So once you get funded, my suggestion is don't go more than that. Don't go more than 1% per trade. So always risk 1% maximum per trade, and daily set maximum loss 2%. So what here will do is it will control your psychologically. You'll be more balanced when it comes to losing week. Let's say even if you lose 3 days, you're still going to lose close to 6%. So the max is 2% per day. You don't lose more than that, and you need to know your continuous losing strikes. Losing trades lah. I say how many times continuously you lose trade? Is it going to be 10 times? If 10 times you cannot risk 1%, then your account will be violated. Is it 5 times? Or is it 20 times? Or is it 3 times? So you need to know how many times continuously you lose before you get your next win. So that's where it's going to be very interesting on this money management topic, because it's not just you choose your risk, but it also depends on the number of trades you're going to take, and how many losing trades you're going to have, and how many continuously winning strikes you're going to have. Continuous winning. So how many times you will win? Is it 5 times continuous, or is it 10 times? So once you win 5 to 10 times, you will be expecting a loss over there. So your mental will be prepared. Same goes to continuous losing. You know you're going to lose 5 times. So once you lose 5 times, you're going to win next. So whenever you lose 3 times or 4th time, you will be eager for your next trade, because you know you're going to win. So you're shifting your mindset here, from losing mindset, you're shifting to winning mindset. So your next trade you're excited to take, because you know that you're going to win the trade. Not that you have a scarcity mindset where you're going to lose the trade. So that's where it's very important to know how many times you will win. That's why you need a trading journal, which I already put a link below, so you can check that out. So you need a trading journal to calculate this, how many times you continuous win, how many weeks you're going to go losing. Like sometimes some traders, they might have a losing striking week, that they can lose continuously 2 weeks or 3 weeks. So that also you need to know what's your winning strike and what's your losing strike. Once you know that and how much you want to lose per week, and you need to set your per week loss also. If you're going for 100 account, so when you're going for 100 account, you need to set all that. So we covered your personal account, your 100 account. Even for your personal account, set daily loss and also daily maximum loss and also weekly loss. If you lose like 5% or 10% of your 100 for your own account, don't trade for the week. Wait for the next week. If in case you're trading vigorously, lah. But again, if you know your game plan, you know how many times you're going to win, how many times you'll lose, you are stable with your trading, then you can continue trading entire week. You don't need to stop, because sometimes you might lose the 4 day and the fifth day you might win back everything. So that's why you need to know how many times you lose before you win. So that's a very important thing you need to know. Let's go to gambling trade. Let's say you want to flip your account. How do you flip your account? How do you flip account? So when you want to flip your account, you need few things to be in arrangement. The first one is, okay, the first one is how fast you want to grow. You want to grow. So let's say you want to grow very fast, so you can go into risking 20 to 30% each trade. This is flipping account, where you flip your account like $100. You want to make it 1,000. So for this kind of trade, it's very easy. You just need to fix your risk per trade up to 20 to 30% each trade. 20 to 30% risk. So why I say 20 to 30 is so that within 4 trades or 5 trades, you can flip your account. If you risk 20%, you need 5 trades. 30% is around 3 trades lah for 90%. So this is how you're gonna flip your account. So if you lose 5 trades, you're gonna blow your account. You need to know that also. So you're losing strikes. It's only 5 trades to lose the entire account. So for flipping account, it has some methods. You need to grow more into it. It's gonna be a more longer videos if I want to show you how to do, because you need to put a chart. And then let's say it's 1,000. And then I think many people have done this before, but I'm not a so huge fan of this. You just put 20% per trade. And then you need to put your take profit, stop loss, everything. For this I might do a more detailed video later, so you might want to stick around for that. So first of all, you want to be a consistent trader. Don't go focus on flipping account. Be a consistent trader. Once you be a consistent trader, you can go for 100 account. As usual, go for FTMO first, max out your FTMO, then you can try for other 100 account. So once you go for 100, you only need 5%. You can do for week or per month. Once you do 5% per month, $100,000 account, 5% is close to $4,000, 80% or 90% give out payout. So it's quite good ready for me, and quite good for many people. If you are starting out, 5% per week or per month is quite good enough. Make sure your target is that. If 5% per month also is a lot, you just change your strategy for the risk side when you want to pass your account, because that's going to be 10%. Now once you pass that, it's another 5% for the second phase, and then you're good to go with your funded account. That's my thought, and you can use this BBPIPS calculator to calculate your account size, and you can use this spreadsheet to make sure you want to trade many other pairs. And there's other calculators also you can use. Just Google it up what calculator you want, like fund management calculator. And some brokers, they might change their position sizing, so it's always best to test out first. Test with 0.01 or test with 0.110 cents, 0.10. See how's the, if you don't know anything, you just want to take out straight, that's the method. Just trial and error. Just take a 10-cent trade and see how it goes. So yeah, if you need anything else, just let me know in the comment, and we'll do further video on that. Thank you.